Today we will discuss the differences between different capital sizes and what is the minimal capital recommended to run crypto manager. There is a very big difference between starting with too small capital and starting with just enough capital. The general rule is to have at least 200 times more than the minimum order size. I will show you a quick example with Ethereum futures. What happens if we run it on an exchange which minimum order is $100 versus we run it on an exchange with which has a minimum order size of $10, and you will see that the same bot and the same strategy gives completely different results. So now we will run this simulation, which is not some public framework. We wrote it ourselves. It is very close to real trading. It has all these different settings such as random order dropping and so on, so it's very realistic. We will simulate trading Ethereum perpetual futures on Deribit, but we will change one thing: that Deribit minimum order size will be $100 instead of $10. In reality it is $10, and we will start a simulation on January of this year, and we will end it at before February. We will set slippage, the fee of 2.5%, 0.025%, and the starting balance will be half of Ethereum. So we click run on the trading bot and it launches the simulation. After some time we will be able to see what happens with the balance, what kind of positions it has, and I will show you the difference because we will change in the config the order size to $10, and you will see what profit difference you will get from trading half an Ethereum for 1 month. So the simulation has completed, and we will go to the balances to see what was happening with our balance. As you can see, we started with half an Ethereum. It was worth about $1,800 at the time, and 1 month later we lost almost 5%. No, not 5%, almost 10%, and we had about $1,200 at the end of the month. So this is a big loss. It lost 10%. Now let's change the minimum order size to 10 and see what is the difference, because now we will roughly have, if it is 1,800 at the beginning, we will have about 180 times more the minimum order size. So the performance should be very different, because at this scenario, having almost $2,000 and minimum order size of $100 is way too little capital. So let's try this again. Okay, the second simulation is completed as well. So now let's check the balance output. We started with half an Ethereum, same as before, but now the minimum order size was $10. And after 1 month, you can see that the loss is about 1%, not 10% like it was before. So in general, for the Deribit, minimum capital is recommended to be $2,000, and for Bitmex minimum capital is $20,000, because on Bitmex minimum order size is $100.